Hello everybody, it's Opisas team here and welcome to this edition of CEPI Academy. Thank you Guy for having us, it's an honor and we are extremely thrilled and feel privileged of this opportunity. Today, as Opisas, we are going to present you the subject of real estate market and investments in the United States, with a particular focus of why that should be interesting from a European perspective and what could be the margin for future cooperation and further development. So let's address one of the first questions that you may be receiving. So why would I invest in the US real estate market? Well, there's plenty of reasons for that really. One is that it is the world's largest residential real estate market with a value of $33.3 trillion. It's a staggering amount of wealth, and thus is plenty of opportunities. Another very favorable element that one should consider, especially for a dedicated investment, is the fact that properties quite short on the supply side compared to the demand. There is 1.4 million properties for sale versus over 330 million residents. Another reason, which can be also seen as an insurance or as a sort of warranty for a client, is that the American system, while being far away from us, is extremely transparent and efficient, especially in the terms of in which it defines ownership rights and legal and business system. So it's true that you are investing abroad. It's also true that you're investing in a country with a very, very strong sense of private ownership. The fiscal regime, as anticipated, is particularly advantageous. In fact, thanks to the attractions, thanks to all its progressive echelons, there is really few other countries in Europe that can compare to that in the world, really. So it's very investor friendly, shall we say. On top of that, most of the population in the United States, especially in the property segments that Opisas is targeting, live on rent, so they are tenants, they're not owners, which is of course an extremely important part in determining the demand. If you put together this element with the previous one, which is the ratio between properties for sale and residents, it will be quite self-evident and also quite staggering in its magnitude that most of the people there tend to live on a rent, and therefore there is a high demand. And of course there is also the fact that you are investing in another economy, which implies in this case that you are investing in US dollars. So also currency diversification could be a plus for some investors. Moving on, here we're going to see in a slightly more specific manner, we can say, how rental population, so tenants, are extremely overrepresented in some type of properties, namely the condo apartment, which is a very common type of real estate, especially in states like Florida. It simply means that there is a unit within a residence, so it is not an independent unit, in that it has also access to a wide array of features like swimming pool, security, gym, this sort of amenities that of course enhance the life quality of its tenants and also the attractiveness of the property. As you can see, tenants can reach up to 92% of the population of residents in this kind of units, which again makes up for a steady yield and a quite elevated rate of turnover. Here we would like to focus slightly more in detail on how we do calculate the yield, so the maths behind a US property investment as we propose it. This is a real case study from Opisas historical data, and as you can see, the purchase price is $79,000. You can see the rental fee highlighted here is $950 per month. The surface, the price per square feet, which gives us the gross yield amended of three voices of expense, which are in order the property management, the condominium fees, in this case because it is a unit in a residence, otherwise will be an insurance on the building, and of course the property tax. So the gross yield minus those three invoices gives us the value of the net yield. Expressed in percentage, it's 8.07%. Here is expressed in dollars as well, which is $6,372. All right, now I would like to give you, a broader overview of how foreigners do invest in the United States, in particular thanks to some data that we are extracting from the Joint Report 2019. For those of you who are not aware, Joint Report 2019 is the latest edition of a joint report developed by CEPI, of course, Opisas, and NAR, which is the National Association of REALTORS, and it is the US largest association in this industry. Together we developed this joint report, and there are some really interesting and fresh data which can hopefully be of any help for those of you who are interested in advertising and suggesting your clients this sort of real estate investments. So we see this first slide about that. There is a huge component of foreigners who tend to invest in the US real estate. In this case, it is between 2018 and 2019, and the total amount is $77.9 billion, which is huge. And most of the purchases of existing homes are performed by foreigners, and for the latest edition they amounted for 183,100 already existing homes, and the median purchase price for those properties is assessed in $280,600. This is the median price. Of course, it can vary a lot, but it gives you quite a precise idea of the range of properties and investors that are considering this market. Europe-wise, it should be no surprise that the countries that are the most represented when considering real estate investments in the US are Great Britain in the first place, followed closely by France and Germany. These are the countries whose citizens tend to invest the most in the US real estate market, at least in the last year. In particular, Florida is the first destination for foreigners who intend to purchase a real estate investment in the US. Florida, of course, can offer a wide array of solutions from Miami to Orlando. It's extremely sought after market real estate-wise. It's also worth noting that 40% of non-resident foreign buyers decides to purchase a real estate in the US as a pure investment or an alternative for combining personal use and investment side. So 40% decide to just rely but as a source of extra income, which is also worth thinking about. Interestingly, as you can see from this slide, 40% of foreign clients instead decide not to purchase. This can be due to many reasons, possibly because they cannot find the right property to suit their needs, or because the cost of the properties that they are proposed is too high compared to their expectations, or simply because they cannot get financing for performing a purchase. This is a very high percentage, and it should be considered as proof of the fact that there should be more dialogue between real estate professionals in the US and in Europe, and of course vice versa, because 40% is a really high percentage, and this means a lot of potential business that got wasted. Moving on, we can see how 7 out of 10 European investors, which is a very high value, do not consider as a priority or as necessary to personally visit one property abroad before investing, which means that with given the proper information and assistance from a professional partner, there really is no need, in most of the cases at least, to move there and see for themselves before buying, which of course can speed up the whole process. 6 out of 10 European investors instead want to be supported by an expert when investing abroad. This is sort of backing implicitly the previous slide, so the presence of a professional partner is highly recommended. Again, this next slide, we can see how 72.54% of European investors expect to benefit of a yearly net yield that goes from 5.5 to 9% generated by their real estate investment. This is a quite high percentage or quite a high value, but there is plenty of opportunities that can be capable of providing that sort of income. So there is market for this kind of demand, which is also worth noting from your perspective. Now I would like to give the word to our sales manager, which is here with me, I'm sure she's thrilled to continue the presentation. So, Guy, Vittoria, thank you again, and we will remain at your disposal for any question, of course. Thank you.
Let's go to some key figures, in my opinion, that are important that European realtors find in the partner that they are looking on the market to present in the proper way this kind of investment to European investors. In this case, for sure, are our key figures. Opisas is active in the market since 2008 with more than 18 offices in 3 continents right now. In these years, so almost 12 years, we make by our client over $295 million, transacting more than 3,800 properties. We are organizing this time more than 600 events and training and workshop and this kind of events. We have more than 3,000 sales partners worldwide and over 20 strategic alliances with real estate associations, including the NIR in US and the CEPI in European Union and other very important associations in all the European countries. FIAP in Italy, for example, of NARCS in Slovakian Republic and other countries in Poland we have and other countries in Europe. And we are acting also as asset managers for 35 companies that are doing their business in investing in this kind of property. And we are the only European group with US certified purchase process, which is our investment method. I put these slides not because I want to be very honest with the audience. In my opinion, are very important to see how these investments are working. Okay, for sure, this is our investment method. Maybe on the market there are other investment methods about this kind of property in this kind of market, but it's very important for the audience, in my opinion, to take a look at least to one of these investment methods to understand how it works and how can it work in a proper way. So first of all, we do a very deep analysis about location and asset. So there is a location and asset selection. Then direct and full equity acquisition. So Opisas is the first investment in this property, buying directly the property and doing it in full equity. Then there is an enhancement with a full renovation of the property and a complete due diligence. So there is a renovation about the assets, so enhancement about the assets of the property, but also about the property title through the due diligence. Then there is the income generation. Here still the property is inside Opisas, so we didn't sell the property still, so he is still in Opisas. The income generation through selecting and placing the tenant that he will pay the rental, and at the end, the sale of a property to international investors that will buy an already renovated and rented property. In our case, with annual net yields from 6 to 11%, that comes net yields that come from rental, and plus the capital gain when the investor will resell the property. From here to the end of the investment, there will be a full management and a full assistance from Opisas and from the partner in Europe and US that Opisas has. So the property is fully managed. So it's very important, in our opinion, for the realtors to know that the partner with whom they are working, and for the investor that knows that the investment is a turnkey investment with a complete support and management for the whole duration of the investment. In the investment planning, so in the first phase, so when the realtor is talking with the investor and the partner is giving the right informations to the investors to try to understand which are the value that investor wants to find inside the investment. So if he wants an investment that has that the most part of the earning comes from the rental yield or from the capital gain when reselling the property. If he would like an investment that goes from that has a period 3-5 years, so a short mid-term investment or a mid-long-term, let's say 5, 7 or 10 years. This is very important, and all this kind of stuff is important to give all this kind of information to the client, to the investors directly when planning the investment. Then full property management and support during the whole duration of investment, and at the end an optimization of the exit strategy. As I said, this optimization of the exit strategy starts in the investment planning. So when a client asks for an investment that has a period of 3-5 years, that means that in this period, in 3-5 years, the investor will have the higher level of capital gain on that property, so it will be more interesting to sell the property in that moment. So he can exit the investment in 3 or 5 years, so a short mid-term. This is possible to plan directly in the first phase, because if the investor will choose some kind of property and especially some kind of location, we know already that we have this period of investment. For example, if investor is investing in Florida, Florida is an international market, so that means that people are buying and selling property not only from America, but are people from all over the world. That means that is a very high demand and that the market is very dynamic. And it's possible to imagine to have an exit strategy, so a selling of a property with a higher capital gain, even in 3 or 5 years. On the opposite, if an investor would like a longer investment, let's say 5, 7 or 10 years, we suggest to him to invest in northeast big cities like Detroit, Baltimore, or Philadelphia, for example, that are big markets but are local markets, so are not so international, so are very interesting from a rental yield point of view. But regarding the capital gain, to have a higher capital gain, it's better to wait a longer period. So all these kind of things we can talk about when we talk about these things with the investors directly in the investment planning. And here you can see also some of the services that we are giving. So we are giving accounting and fiscal services, legal services, complete property management with clear and detailed reports. There is a dedicated staff, personal online area, and so on, total and transparent access to documentation, and so on. So these are very important, that the investor knows that has a partner that gives all these kind of services, and he has not to think about these kind of things, and even the realtor has not to think about these kind of things. Here we put some benchmark case study from our portfolio investment that we present to our investors. Here is a 5-property portfolio purchased in 2014 with an investment capital of $500,000. The case study take 5 years, so this portfolio was bought in 2014 and sold in 2019. So the day one, the rental yield was $63,000 and more per year. That means 12.7%. This is the gross rental yield. The net rental yield is about 9.6% per year, which is a little bit less than $50,000. the net after 5 years, the net rental yield was $240,000 and more. We put here a minus 8% provisions for maintenance of the property, because you know better than me, it's still a property investment. So there is a real asset, there is a house, and a house in 5 years needs some maintenance, maybe has some vacancy or turnover of tenant. So we put a provision of 8%. So the updated net yield is $221,500. At the end of these 5 years, as I said, this portfolio was sold. The exit strategy that we put here is in 5 years based on Opisas' real track record. So there is also a capital gain that in 5 years was of 19.2%. That means 3.8% per year. So the price at resale was a little bit less than $600,000, plus the net yield, which is the updated net yield that we saw here, minus the cost of the resale of the property, because for sure there is a cost for reselling. The final cash was in this case $769,000. That means an EBITDA of 269,000, so earnings before taxes of 269,000, and a return on investment of a little bit less of 54%. This is very important, in my opinion, to have an idea of both the net yield producing income, and also the capital gain that produce income at the end, at the exit strategy of the property. And this, as I said, is a benchmark case study, a real case study, and it's also as you can see also in this slide, you can see another portfolio of $500,000, or better, $498,000. So we can provide not only investment in one single property, but also in portfolio property. As you can see here, in this case are 5 properties with different exit strategy. In our opinion, it's very important to give to investors this kind of opportunity. That means that if an investor has $500,000, it's better, in our opinion, to invest in more property than in just one. Because if you invest in $500,000 in one property, and that property for 1 month the tenant is not paying the rental, that is a problem in the net yield at the end of the year. If you invested $500,000 in 5 property, and one property of that is not generating net yield in 1 month, you have still the other 4 properties. So the net yield is still good at the end of the year. And also it's important that the exit strategy can be diversified inside the portfolio. So here you have a short, medium term, so a property in Florida, and then you have 4 medium, long terms property in Baltimore and Philadelphia and Detroit in this case. So this gives 2 things to the investor. First of all, a management of the risk, very interesting, very balanced, and very diversified, because you are investing more properties, you are investing in properties that are located in different areas, and you are investing in different kind of properties. This is balancing all the possible risk in the investment, first of all. And second, because the exit strategy can be decided also during the investment. So if the investor has needs money back, some of the money back for his own purpose, he can do it, because here has a property short, medium term, but he can resell the property before the 5 years of or 7 years of the portfolio, and still he will have a good capital gain on that property, and he still have the other properties go on with the other properties that are generating ongoing net yields. So this is important both risk management, that is very important, and a modular investment during the years. So let's just say why collaborate with Opisas. For sure, as we say, the new business opportunity, we provide customized tools and marketing material to our partner and REALTOR. For sure, also commissions are very important and are quite high. We have exclusive information and reports that we are providing through working together with our partners on both sides of the ocean. We are organizing a lot of training on US real estate market. Have a lot of social media and this kind of news and this kind of stuff that are useful, in my opinion, also to send to the investors and to see what's on in the US real estate market. And we are organizing a lot of events and workshops. All these things, in our opinion, are very important to propose in the right way this kind of investors. So if you would like to do this kind of business with Opisas, you are more than welcome, and we are very happy of it. If you would like to do it with another partner, no problem, but try to find the partner that gives to you all this stuff, these kind of things that are very important to you, for your job, and also that gives to your investors all the assistance and all the customer care and all this kind of stuff, because it's very, very important to not to give headache to your clients and to your investors.